Good morning, it's Friday, September 27th, about 6 a.m. Central Time. In this video, I want to unpack three important things here: the economic data, the technical analysis, and also the gold-silver ratio. So looking at the overnight price action, precious metals, they're taking a small breather ahead of today's very important core PCE data after yesterday's bull trap ahead of a flurry of economic data. If you listen to the Metals Minute yesterday, I told you at the 3:30 mark that we had such a great move overnight in the precious metals that we don't want to ignore the economic data coming out. I had told you previously that the initial claims data had surprised at a downside on the previous week, resulting in a $20 drop in the gold market, and that we could see a similar situation occur if the data repeats. The combination yesterday of the core durable goods as well as the unemployment claims coming in better than expected, along with inline GDP, shifted the CME's Fed Watch tool from a 60% chance of a 50 basis point cut to a 49%, which caused gold to retreat from its all-time highs of $2,708 and silver futures to have just seemingly a wild trading range of 99 cents with a high of 33.02 ahead of the economic data to a low of 32.03 and closing at 32.31. So quite an extensive recap of what happened yesterday. Now looking at the overnight price action here today, small breather what I'm saying. Gold futures down $6, 26.88. Silver futures down 9 cents, 32.25. Having about a 50-cent range overnight in the silver market. Copper futures seemingly right around unchanged, kind of anchoring itself and focusing on the impact of the Chinese stimulus. You have platinum futures down $1 at 10.12, and no real big standouts in the markets whatsoever. Bitcoin drafting a bit higher, dollar index a bit lower, but most commodities across the board, they are quite mixed. Now, spending 30 seconds on technical analysis, I had a subscriber they had requested. So besides looking at economic data, traders really should focus on the technical analysis part in an unbiased manner. Remember, you want to keep your feelings really at the door. I use quite a bit of candlestick analysis. One thing that I did note here, and I circled on my charts in the silver market, was yesterday we did see a shooting star pattern. So this being the May lows, this being yesterday's highs. And what a shooting star pattern is just where the trends start to lose a bit of momentum. Momentum is the key word. I oftentimes put a bunch of momentum indicators and I start to look for them to run out of steam so I can manage my risk properly. Now, one thing you'll note here is that this was Thursday's highs. We opened here, we rallied up to our high, and we closed down here. This was in May. This is a bullish hammer where we open up, we sell off, and we close right near the highs. Quite the opposite. So that's what we're seeing here, is that just yesterday's candle sticks out a bit, and it could set up a small correction here, but often this is going to be quite data driven. Now looking at today's focus, the CME Fed Watch tool, now it's hinting more of a 25 basis point cut rather than a 50. That PCE data is really going to drive that needle here today. So core PCE month over month expected 0.2%. We'll see if there's any gyrations to that. Also, the personal income and the personal spending. Remember, personal spending is a gauge of how the economy flows. You want to see strong personal spending in order to keep that economy alive. Any kind of weakening of that data that comes out is going to accelerate the Fed interest rate cuts. That'll help your gold position, and that'll push gold prices back up to new all-time highs. So we don't want to see some of this data come in a bit hotter than expected because of the fact it could put some things down, especially on the inflation data. And then finally, we want to see that income and that personal spending do its job as well. We will have some smaller data releases shortly after that with University of Michigan consumer sentiment and the inflation expectations. Now, here's something that's important, that at night, at 9:30 tonight, 8:30 Central Time, China is going to release a bunch of manufacturing data that's coming out. Their manufacturing PMI and their non-manufacturing PMI. That's going to move the needle on the silver market, copper market, and gold on Sunday night. That's where it's really important to have a futures trading account, because if that market pops up to $40, you're going to want to ring the register, and you don't want to be waiting around till Monday morning to get out of your SLV or whatever. So another thing to focus on, so that's pushing past the economic data, is the gold-silver ratio. So what I'm hearing from a lot of people is they say, I missed it. Silver's at 32 bucks. Gold futures are making new all-time highs. So the gold-silver ratio, again, reset things. Focus on the technicals. The gold-silver ratio, 83 to 1. In 2021, during COVID, we were at 60 to 1. So if you take the price of gold, you divide it by 60, that puts silver at $44. We're still $12 below that. That's a lot of action between here and there. That's a lot of road to cover. And if you go back and you start looking at 2011, when silver futures broke through $50, and you take where gold is right now, 26.88, and you go to the ratio, 31 to 1, where's that put silver? $86 an ounce. That's a light year away. That's between here and Mars, as far as I'm concerned, and a lot of ground to cover when it comes to trading and a lot of opportunities out there. So from a historical standpoint, I think that silver, based on that ratio, is significantly off. So you can look at a couple things here on this video. The economic data is going to move the needle. The technical analysis plays a role on your entry point. And then, again, feeling like you missed it, look at the ratios, look at the historical analysis on where things should be. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.